Hi traders, it's Ryan from theprivatebanker.com. Just going to do a quick recap for crude oil today. Just going to explain what I saw in a day and how I approached it. So first off, what we saw going into the RTH pit session at 9 o'clock Eastern time was a gap up. So the market opened gap up above the previous day's trading range and looked for two possible scenarios to play out. So first of all, starting with the higher time frame analysis, and I'm going to use the weekly. We can see that we saw this one time framing up to the bracket high that I've been talking about, and we see some two-way trade come back into the market. The market was one time framing higher, and we held the high as we tested this previous low. So we're not taking out the previous low to see some balancing at the higher the bracket, and then last week we see the one time frame taken out. So two things could have happened. We could have continued to balance here, and we could see reversion back down to the bracket low, or we could see obviously what we're seeing now, balancing at the top of this bracket and a potential breakout we're looking for higher. So a couple of things to note here is the 5 exponential moving average is starting to push this market through this top of this bracket. So coming into this week, the market opened right on top of the 5 exponential moving average, and we see just a buying imbalance to the buy side, just a pure buying imbalance. So from the weekly perspective, obviously this didn't happen earlier, but we were trading, like I said, into the 5 exponential moving average, and we see a buying straight off the Globex Open on Sunday. So then moving to the next time frame, I'm gonna just start off now from almost a bottom up approach, but I'm just going to start to go through the different contexts I was looking at going into today. So first of all, I'm going to look at the composites I've been currently looking at. So first of all, we had this lower composite, and I'm just going to split this out so you can see it a bit more better. And you can see that we opened gap up, and we see the market try to break down and see a reversion back to previous price, but buyers just cut off selling, and sellers could not push price down. And what we did is we just basically put an all-time high in for this year on the back adjusted contract. So we put a new high in, and we see this balance in two-way trades come start back into the market. And we had a poor low on this distribution, as I said, and the market came down, cleaned up this poor low, and we see a reversion back to the higher prices. And from there, we just see this two-way trade come back into the market. We just see this two-way trade come back into the market, and we see a series of this two-day balance here. We opened above, reversion back to the mean. We opened below, reversion back to the mean. And then on Friday, we just see this auction where they come down, tested the sort of value area low, and we just see buying back into the close. So starting this week, like I said, we just see a gap up in the RTH session. So what we saw here first of all was this context. So two things could have happened today. What could have happened is we could have found no offer, and we could have seen a reversion back to the latest value. So the latest point of control was at 102.40s, and the value high was at 102.80s, and the very low was at 102.26s. So if we couldn't find offer off the open today of the gap up, we would have looked for a gap fill, and we would have seen a reversion back to the mean, because what we initially did is open at the extreme of the current market. So what we did as a textbook sort of entry is we wait for the initial balance to form, and then we wait for the market to show us the direction it wants to go. You could have been aggressive and used the higher time frame context and just bought this market off of the open on a pullback, and I'll show you a reason why we could have done that. But I mean, once the initial balance got broken to the buy side, there was a clear entry into C period, which would have been about 10 o'clock, 10:30. Sorry, it would have been going into 10:30. Then what we see was just a Globex session, which was just showing a pure imbalance to the buy side. Obviously this was the previous value area that it was in, and as you can see the market was just purely imbalanced to the buy side. We just could not trade back inside value. This is where we opened in into the pit session at 9:30, and this was the first rotation causing initial balance, and then in B period we see a spike up, and we saw the market trading above the initial balance and above value. And this would have been your first entry location. The other entry location you could have took was the fact that we had this previous double distribution trend day, and we opened gap up above this distribution trend, and we could have used this as a market context regards structure. So the market came down, we tested this previous sort of point of control area, and we see responsive buyers. We could clearly see this sort of on the off the open with the orders getting placed. So this is a 9 o'clock open, and what we see is we saw a drive down into this huge nice amount of buying absorption, and the market just saw lift off and continue to reject balance. So this would have been a confidence area, and your stop would have just been below values and this swing low. So depending on what your risk was on the trade and how aggressive you wanted to be, this could have been the first entry, with just looking for the market to continue to reject value, and for the market not to trade below this low and below the mean and below this 103.40s. That's where you would have been wrong and got stopped out, and then you would look for the mean reversion to the sell side. But otherwise, the more conservative entry would have been, like I said, this entry would have been into going into the 10 o'clock trade, because the market opened at 9 o'clock, formed initial balance, we broke out on B period, so going into C period, which was at 10 o'clock, that would have been your entry location. Your entry location would have been off the top of the initial balance, so you probably would have got long around the 103.84s. You got fully scaled and you just held your position into the close. I mean, we did break the one time frame and see this micro balance come into play. But regards to the current context that we see on this market, you would have looked to just hold your stop inside the previous initial balance, inside the initial balance, and looking for the market to continue to be rejected to the buy side. A couple other things we're looking at, which is very important, is the fact that we open right on the top of this year's value, and we, like I said, just off the open we see an imbalance to the buy side. And we didn't actually put a new high on this year in today's RTX session. We held the high for by a couple ticks, and then into the Globex close we see a punch higher in ETH. So at the moment we have a new year high in the Globex session, and not in the RTH pit session. So this generally means that there is more business to be done in this area. So nice destination trade on this current bracket that we're in. More conservative traders would have probably took most of their positions off into this bracket high, and as the market breaks out, they will continue to add to their positions in the longer term swing, looking for a trade back to the $111 a barrel area. Just a couple other things to look at. If we look at the 240-minute charts, I mean, I did say this last week. We're trading in the lower end of this current longer-term bullish channel that we're in. We're currently looking oversold, and looking for a reversion back to at least this bracket high, micro bracket high at 103.60s. And what we've seen here is literally a rotation from the low to the high of this current trading range. So going into tomorrow's trade, we would possibly expect a gap up with the price action we've seen today. Obviously not predicting anything, but with the current context in play, I would expect a possible gap up tomorrow going into tomorrow's trade. So just going to leave it at that for crude oil for the minute. See what happens going into tomorrow's trade. Nothing really too much to report on gold. We're still holding the 1250s area. There was some selling today. There was a bit more selling into the Globex open just a minute ago, but nothing to report too much. Just a two-way trade in this market of indecision, waiting for something to happen. It's a similar sort of situation to crude oil, but the opposite side. We're just rotating and holding the developing value area low. And so again, I'm looking for a push down on gold away from the developing value. I'm just going to leave it at that for today. Just one more thing to note is this is a change in perception of the current market, and this will be a new distribution that I look to start tracking in regards to this market pushing forward. Obviously, if we do fail at these highs, and which is highly possible, who knows what's going to happen, then we are looking for reversions back to the 1240s. Anyway, I hope you all had a great day, and I'll catch you all tomorrow. Take care and goodbye.